We're going to take a look at the commodity sector. Got a little bit more data since the last time I looked at this. Real quickly, again, let me point these out. These are 3-year cycle lows. Obviously, we had a major one in 2009. Next one was here in 2012. Then this cycle left translated. We get next 3-year cycle low here in early 2016, corresponded with the stock market forming its 4-year cycle low. And in my opinion, I think this is probably a generational low in the CRB. Oil was at $26 at the time, and I just don't really see a scenario other than a terrible deflationary depression where we could go back to those prices again. So I just don't think we're going to see this level tested again anytime in the foreseeable future. So here's a longer term chart. You can see the last time the commodity complex was at these kind of depressed levels was way back in the 70s. So I don't think we're going to see this ever again. All right, so moving on, the current 3-year cycle it's already right translated. You can see we've got a higher high here in 2018, and that's about 2.5 years into the cycle. So we're already right translated, which would tend to confirm my theory that we are not going to test this level again, even during the next 3-year cycle low. And at this point, I think it's pretty clear that we got an intermediate degree bottom and probably a yearly cycle bottom right here back in August on the commodity complex. And the next 3-year cycle low is going to be due sometime in the spring of 2019 to, it can run 3.5 years. So it could be anywhere from the spring to the middle of 2019. So my thought is that we're probably going to get one more leg up before the CRB rolls over and then gives us, another one of these. But the one in 2019 should hold well above this level. So we've got some resistance zones here around 210. If we can get through that, maybe we get to 230. So I think we're going to make at least one more higher high above this before this 3-year cycle tops, and then we get a move down sometime in early to mid 2019 into the next 3-year cycle low. Okay, moving on to oil. We really haven't had much of anything that I can identify clearly as a intermediate degree correction in the oil market for over a year. I guess this is about as close as we're going to get, this pullback here. It still didn't give us even a failed daily cycle, but at this point I would have to say this is probably would be our intermediate cycle low. And so we're starting a brand new intermediate cycle as we come out of this August bottom, and then here's the problem. I've noted before that virtually every time oil has spiked, let's just call it 100% in a year or more, it has caused severe inflation, and that has ultimately led to a recession. So let's call this the bottom here at $65. If oil gets to let's say between 120 and 130 by August of next year, then we're probably going to have a recession in 2020. And not coincidentally, that's when the next 4-year cycle low is due in the stock market. It would be in 2020. So something to watch here. We're still very early in a brand new intermediate cycle. A lot of upside still left. If this really starts to accelerate to the upside and we get above $100, and especially if we're above $110, somewhere in this range, then I think we've got the conditions in place for a recession by 2020. Moving on to gold. In my last article, I um, uh, covered in depth what I think was going on. I think this is an A wave advance, and I think what we've been in ever since this topped is just very difficult and complex B wave correction. Um, Last week on that breakdown of the consolidation zone, my thought was is that gold was going to make a quick move down and in a quick little undercut of the August low, and we would get our bottom somewhere between there and the election lows here at about 11. I guess that's about 11:25, 11:30. So my thought was is that we would get just a quick move down there and then move back up. But as of today, Tuesday, October 2nd, gold is reversing back up. So we got stopped out of we had to put on a quick short position anticipating a move down into a daily cycle low, but we got no follow through, so we just stopped out very quickly the very next day. And at this point, it's kind of up in the air as to whether or not this was just a very quick daily cycle low, and gold is going to follow the rest of the commodity complex up at this point or not. I'm kind of starting to lean in that direction, but I think I would need to see a little bit more data, maybe to the end of the week, before I decide firmly whether I think this move down late last week was indeed a shortened daily cycle low, and that gold is now ready to follow the rest of the commodity index and the CRB higher into maybe some kind of an early 2019 top before the commodity complex starts down into that 3-year cycle low. Here we have a chart of palladium. You can see the rally out of the August bottom has been especially powerful in the palladium market. Like as I pointed out before, there's no motivation to manipulate the palladium market. It's just too small. There's just no potential gain by trying to suppress the palladium market. So I think we have true price discovery in this market. You can see we've got an exceptionally strong and violent rally out of this August bottom in palladium. And finally, it's a little bit hard to see on this long-term chart, but I'm starting to wonder if maybe we might be getting shortages in the silver market. And I'm starting to wonder if the silver market might not be about to take off to the upside, similar to what palladium just did. So, something potentially to keep an eye on in the days and weeks ahead. This might be could be an explosive move up in silver if the metals market are about to move higher and follow the commodity complex into a multi-month rally.